ladies and gentlemen, how it works. So I will not show you the whole work around the. You can see here these are all data columns, and the machine has worked some projections, but it's an ARIMA model, Sarimax model, blah 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 blah. So we'll jump on all of that because it's working with data, and it takes a long time to understand the data because it's a lot of things. So how it works? So big drama. The Chancellor of the Exchequer was crying, and so what's new under the sun? Or as Galileo said, give me a lever, I will lift up the world, and it moves around. So the idea is to basically give a tax credit to employers who employ people who are in protected categories, which means disabled workers. And I've checked, and there is a standard employment allowance up to 10,000 per year, but that's not per worker, it's the overall amount. So the math is very simple, the arithmetic is very, 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 very simple. Okay, so build a code. We know that there are 3.7 million disabled people. Okay, not everybody can work, 90% of the people cannot work. Well, that depends. So let's say I want to achieve 10% of the 3.7 million people to be employed. Okay, so the maximum personal independence payment is roughly 9,000 per year. The average in aggregate amounts to 6,600. Like, let's make it 7 grand a year. We can change the input average salary 25 grand, 28 grand as how you want to run the numbers basically. So we know that the employer has to pay 15% of national insurance contribution towards the welfare system. So what do we do with a drunken sailor? We say to the employer, when you employ somebody who comes out from the PIP claimants pool of people, I will give you a full 15% tax credit on the contribution that you pay for that employee. So, but how it works? I give you the tax credit, like 15% on holy moly, it's all in numbers. We have, let's say, 20,000 per year. 15% is 4,000. Those 4,000 have to go in the form of a wage uplift. So we do plus 28,000, right? And it's 32,000. So the net wage for somebody who comes from, it becomes employed and it falls within the protected categories of diversely able workers, like disabled workers, etc. They need to have a wage uplift paid by the employer, which is matches exactly the full 15% NIC employer contribution tax credit. So the tax credit is 4,200. Arithmetic easy done, because the average government subsidy is between 7,000 and 9,000. So on a salary of 28,000 per year, the 15% tax rate for the employer, it amounts roughly to 4,200. So if we do 7,000, I withdraw, the DWP withdraws the subsidy because the worker receives a wage uplift. Okay, right, I make 2,800 saving per worker. if on average, if the disabled person is receiving full personal independent payments minus for grant, the government's accounts save 4,800 per worker. Okay, if we multiply by 370,000 people that hopefully will get into work, it's a net saving of 1.7 billion. But to that, and you can run the numbers, you can say, you can basically model for 25,000 salary, 28,000 salary, 37,000 salary, so forth and so on. And you can vary the percentages of, let's say, tax credit and subsidy savings, etc., etc., etc. But basically, that's the saving. But you have to consider also that at 28,000 a year pays a net 28,000 a year pays 5,600 PAYE income tax. Okay, now if and when the worker, which is partially disabled, pays 20% income tax on 32,000, then the cash flow is 6,440. So there is another trade-off, which is net positive for the exchequer, which takes more money in because the salary, the net wage, its amount is larger, and so the tax rate collects more. The same tax rate, which is 20%, collects more money. And so that's the basic model, okay, which accounts for 100% tax credit for the employer, 15% NIC contribution. That's only for people, citizens who are disabled and they can work. They are put into work. After 3 months, the DWP can withdraw completely the PIP subsidy, only if the wage compensates the subsidy that is withdrawn from the state. So basically, it should be normal like that, because the state cannot subsidy somebody who is in work. So it's a duty of the employer to guarantee that somebody who has some special needs, who is partially disabled, etc., 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 first of all has to be employed. So in many countries like Germany, France, or Italy, 5 to 7% of the workforce for each firm has to be hired from protected categories, which means disabled workers. Okay, so, and those are the numbers. Okay, so if I plug in the numbers, etc., 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 then I come up with the net fiscal gain of 5.3 billion for 1 year. If I project this in 5 years, then the fiscal saving goes up to 20-30 billion. It depends on what is the rate of wage growth, what is the rate of growth of employability for people who claim PIP and then find jobs. So it's not like automatic like a Python formula, but that gives a wider sense of my personal idea. Okay, because I like to work with this stuff. So basically, okay, that's another simulation which includes also the people who are in work. So there are estimates that there are around 16 to 17% of the overall UK workforce. It's people who are disabled and they receive some PIP subsidy. So it's around 630,000. So you can save from people who are employed, from become employed and they are not unemployed anymore, so there is no payment towards them. And then you can, with the same tax credit mechanism, which has to be permanent, okay, basically the exchequer says, okay, the employer NIC contribution goes from 13.8% to 15%, right? But you have an employment allowance of 10 grand a year, which is the same mechanism of saying of having a 12,500 from 0 to 12,000 there is no income tax if you are self-employed or if you are on PAYE, etc., etc., etc. It's the same criteria. I don't really like it because it's too simplistic. But anyway, instead of doing that, let's leave that aside, okay? Normal employers, they can claim employment allowance 10 grand a year, for a maximum 10 grand on the aggregate amount of the whole NIC contribution that they pay. But for the existing people who are in work and they receive subsidy from the welfare state, you can change the tax incentive, basically be a bit more clever, say, okay, I put up tax, yeah, I move the pawn on the chessboard, but I can create a tax arbitrage on the basis of on which sector of the economy I want to push more or I want to cool down. For example, I can keep 15% NIC contribution for financial services, they can pay that. Or I can reduce the contribution by 50%. So instead of 15%, I will ask 7.5% to care workers. Okay, so instead of taking the whole blame, so you put up taxes, you move the pawn 15%, then you can move the horse and you can swap the king with the rook. Okay, and basically you have your own fiscal policy tax arbitrage that it's a lever that you can use and say, okay, for some sectors I will give you this discount because I need more workers in that area, so you will not be paying 15%, but you will be paying, I don't know, 7.5%, or you will have total tax credit for all people that are unemployed and that are hired, so they are new hires, and so I'll give you full tax credit for that. Okay, and then the employer can take part of the tax credit and add it towards the wage of the employee, and that is theoretically but also empirically, practically, a huge boost for the overall economy. But in this case, let's stick with this dreadful thing of the PIP claimants. Okay, so I added the existing employed people and a scenario where the DWP achieves 10% of the PIP claimants population, which is 3.7 million, to be employed. And then you run the numbers with the same percentages. I have the employer contribution 15%. You can vary the average salary 28,000, 25,000, as I was saying. We can, for example, we can run 9,000, the full amount, okay? And then the full Monty, right? Then we run the code and we see net fiscal gain, again, 5.2 billion. Because it's true that the employer basically saves on average £4,200 for a salary of 28,000. But those 4,000 then have to become a salary of 32,000, so that it's justifiable to say, okay, you have a higher wage, I cannot pay you a PIP subsidy, because now it's on your employer to guarantee that you have all the conditions to be able to go to work, including in-work benefits. Okay, so that's how you pass the bucket from the fiscal purse to the employers, but you give them a tax incentive and say, okay, I will give you full tax credit, tax rebate on the NIC contribution. And it works because then it generates a larger income tax inflow on top of the savings that you have from withdrawing the subsidy and net the tax credit. Okay, what I did basically integrate the uh, the bit of the code that we have here with the parameters with the files from the ONS where all the data columns of the non-financial accounts are reported quarter on quarter. It runs from 1987 up to Q4 2024, right? So because I want to know, and then I calculated another, the same columns, instead of having monetary amounts, I just calculated the percentage change quarter on quarter. Yeah. So integrate the two things so that I can work out what theoretically are the projections. Also in a nice graph, like, okay, if I do this welfare change, the annual net fiscal gain will be more or less 4.3 billion. Okay, and yeah, the expenditure, the total the D62 column is the I want to, okay, no, so basically the D62 column is the column that um, accounts for all the subsidies, all the payables. Okay, in accounting terms, it's all the welfare state subsidies payables in the general accounting of non-financial accounting. So the expenditure is basically 100 billion in subsidies. It can be universal credit, PIP claimants, the lot. I don't know. I mean, I don't know all of that because I will prefer to starve to death, but never ask a penny to any state or government. I'll always sort it out myself on my own. I hate to have to deal with any sort of government entity, but I like intellectual challenges, and it's useful for my studies as well. So basically, running the numbers, okay, I have a target of 10% sorry about that, 10% claimants employed, right? 370,000. These 600,000 are the people who are the citizens who are already in work, good on them, and they will have to receive a wage uplift, which comes from the tax credit, the 15% NIC employer contribution tax credit. Okay, so overall it works with a 4.3 billion net saving. Now, if you project this net saving year on year, and you are lucky enough that the rate of employability starts to grow, so you achieve your 10% objective. I want 370,000 people to be in work, and then the next year you have a 3% growth. So basically you find employment for another 10,000 people, and that adds people in the workforce, and basically it makes grow the savings, the net savings on the overall expenditure. Okay, and yeah, here 3.3 billion minus 3.3 billion, it's less expenditure. These charts accounts only for people who are unemployed, who are diversely able, are unemployed, they have 9,000 a year PIP claim, and then they start to be employed. Okay, let's see if I have to run the numbers. No, okay, let's run a model with the 9,000. Okay, let's just it's very easy. Okay, it's easy in the codes, it's less easy in real life. Okay, so you see here that it says, okay, I could not analyze the saving that I gathered from the 600,000 people who are already working. Okay, so run again the code, and we come more or less to the same results. Okay, these are the chart here. These are actually the quarter-on-quarter percentage change in the D62 column, which is the welfare expenditure column. Okay, column. So these are all real data, and yeah, you see the chart here, which tracks in the last 2 years that the expenditure was a little bit below 80 billion per year. Now it's gone up to 100 billion, and this basically is a point of debate every day. I mean, reasonably, not that I mean, the welfare state is something that it's highly necessary, but instead of having 9,000 a year, if I can have 28,000 a year, I will be much happier with 28,000 a year, of course. Okay, so the column D62, and with the code identifier NNAD, it's social benefits other than social transfer in kind payables. Okay, so it's social benefits payables other than social transfers in kinds, because there are also, the government pays on top of social benefits, the government pays also other kinds of social transfers in kinds. So in kinds there are other form of welfare payments which are not only benefits. Okay, and this bill is now 99.8 billion. Okay, 100 billion. Okay, so my work provides a saving for the first year between 3 and 4 billion. Okay, anyway, here net annual fiscal gain 4.35 billion, and it breaks down in subsidy saving 2.5 billion, new tax revenue 3.3 billion, and it comprises of a existing worker receiving a wage uplift, so 600,000 people receive a wage uplift, 10% of the PIP claimants in the pool of citizens, they become employed. So we have an average wage uplift of 4,200, which is 15% of a 28 average salary. And I repeat, the number of course can vary according to the wage bracket and etc. etc. So the employer saves 4 billion, although the savings have to become a wage uplift of 4,000 minimum. And then you have an additional multiplier effect of 2.5 billion of consumer spending. So potentially real GDP or GDP in aggregate is going to grow because you free up some money that become wage uplift, and it seems that it can provide savings because you are paying more in subsidies that you are receiving in tax inflow. So at that point I have to cut off the subsidy and I can basically give a tax credit, and net it works better in the numbers. Okay, so here you have 000 and the chart is not really precise. There will be another chart, much better chart, but you see the blue and the purple columns, it tells me what are the tax revenues and the net savings, year 1, year 2, year 3, year 4, and you have to add the two. Okay, so benefit savings, I'm saving 4 billion, I will have increase in income tax up to 5 billion and more. So when you project this thing, then the saving in 3, 4, 5 years, they become 20, 30. Here it pulls out like 40 billion in the optimistic scenario, current policy, and then you need to have basically more people employed, of course. And let's see, what's this one? We have, yeah, okay. So what it says that with the baseline projected expenditure, the annual expenditure is 25 billion, and in 5 year time it will go to 30 billion in the most moderate of scenarios, okay? But if I implement this kind of tax arbitrage and say, okay, I will not pay you 7,000, 9,000 a year PIP claim, but as long as you are in employment and your employment receives a 15% tax credit, and the tax credit goes towards your wage, net, the government makes a gain on two sides, in savings between payables and receivables, and it takes more receivables because instead of having 20% income tax on a 28,000 wage, it has 20% income tax on a 32,000 a year wage, or a 35,000, 37,000. The larger the wage, the net wage, the larger the income tax. And the better then is for final consumption. And then you have a multiplier effect in the economy, and GDP grows in a healthy manner, because it's not it doesn't come from borrowing the money supply, but it comes out from, in my opinion, a clever idea, basically. Okay, so the cumulative net savings on a 5-year horizon could go up to 30 billion, for as long as that yeah, I have to be precise exactly what are the parameters. Optimistic, pessimistic scenario, current policy. So the optimistic scenarios tells me I have an employment growth 5% per year and wage growth 3% per year. The pessimistic scenario is that I have employment growth of 1%, wage growth of 1%, current policy 3%, 2.5%, employment growth 3%, wage growth 2.5%. Of course, here the code is made to vary the numbers, so it's possible to calculate different scenarios, make different assessments. Okay, so I can here do 25,000. Let's start with 25,000. Okay, so run the numbers again, and let's say people which are on 25,000 net salary, net wage per year, then okay, the charts doesn't help me with okay, that's the okay, but anyway, more or less the numbers are the same. Spending reduction per year, it's 4 billion, so net savings every year will be 4 billion. Cumulative net savings is 36.5 billion. Taking into account, for example, that total claimants can grow from 3.7 to 4 million, and people who are in work and are from protected categories will go from 600 to almost 700,000. So it accounts also for a growth in people who are eligible for such welfare payments, and net savings can be achieved. Okay, so basically that's what I've been working through for the last 3 or 4 days, more or less. It didn't take me long. Yesterday I worked up to midnight. So summing up again, there are 3.7 million people who claim PIP welfare subsidy. There are a little bit more than 600,000 people who are in work and they receive some subsidy. On average, on these 4.3 million people, the average subsidy is 7,000 per year, which it's paid by the government, the DWP or whoever. So here PIP claimant growth 2% per annum. So there are also other variables here. Okay, so the new employment national insurance contribution is 15%. So net, if the government says, okay, I'll give you a tax credit of 15%, when you employ on PIP claimants, people who come from that pool, 3.7 million people, or I can give you 15% tax credit on all the disabled workers that are already in your workforce, but the tax credit must become a wage uplift net, okay? So we simulated before that on 28,000 salary, the wage uplift become it's 4,200. So the net wage goes up to 32,000 a year, and in that case, the income tax goes up to 6,440. Same tax bracket, 20%. Okay, but at that point, okay, I am withdrawing the PIP claim, the welfare payment, okay? Because you are in work, you have a higher wage, and then it's the duty of your employer to make sure that you can look after yourself and have all you need to go to work and provide to your health, okay? It must be all regular, of course. They cannot be paid a few pennies, so basically. So that's how it works. Basically, it requires to have people into work to generate enough savings, and then you can project 4 billion savings per year. But you can basically already save some money. Okay, let's say I have 600,000 people. They earn 28,000, no, sorry about that, 600,000 people, and the average expenditure is 7,000, so that's a 4.2 billion expenditure that can be managed, and you can start to bend the curve, like take the first derivative of the PIP claimants pool, and you're going to basically provide a 15% tax discount. Okay. Well, I cannot do it now on the calculator, it's too complicated. So basically you can work on these 600,000 people. There is 4 billion that can be saved with the same tax arbitrage. Okay, so people, these 600 people, they are 630,000 to be exact, and then the employer, it can be guaranteed 15% tax rebate. The net salary of the people who are already in work, those citizens who are already in work, receives a wage uplift. The government says, okay, now you don't need anymore the welfare payment because it's the duty of your employer, or the business where you work, or your multinational, whoever is the employer. Or if you're self-employed, then you provide 15% tax rebate. And so you can start to save up to 4.2 billion immediately. And while you do that, then you have an objective of achieving a 10% of the 3.7 million people who are unemployed, but they can work on a 2-5 year horizon. You want to make sure that at least 10% of that pool of people goes into work, and then you can have a net saving effect which accumulates fiscal year after fiscal year, and you can save up to 4 billion, and then it generates a spending boost. Okay, and yeah, these are the charts again of the cumulative net savings. I found it really fascinating, and I'm sure it's a wonderful idea. So if you want, or if you would like to have the code, just drop me a message. I will send you the code with an email. Okay, have fun.